Hello and welcome to the Personal Finance Show. I'm Jane Constantinis. Now, becoming a parent is the greatest experience many of us will ever have, but it's not without its stresses and strains, much of which are based on that deep-felt desire we all have to protect our kids. Well, while we're taking care of our children's safety on a day-to-day basis, a staggering 2/3 of Britons have no life insurance should the worst ever happen. Well, joining me today to talk about this and more is insurance expert Roger Edwards from Bright Grey and wildlife TV presenter Michaela Strachan. Welcome, both of you. Thanks for coming in to talk to us. And of course, we're live, so if you've got a question for our guest, then put it in the box on your screen and send it to us with your name, of course. We'll get through as many as we can. Now, Roger, this research that you've done, 2/3 of Britons not taking care of their children's future. What's going on?
They're not planning for the future. They're thinking about what's happening today. Now, what people are very good at is looking after their children on a day-to-day basis. You know, if you're taking your children to school, you'll make sure that they cross the road safely. If they're in the car, you'll put the seatbelt on. So that's good. We're looking after them now and keeping them safe. But what about in the future? And what about if something happens to you as the parent? What about your earning potential if you stop earning your salary because of illness or, sadly, something worse if you die? What are you doing to plan for that eventuality? And that's what our research has shown people are not doing. They're not thinking about a few years hence, 10 years hence. They're just thinking about today and the little things that happen in our lives.
It's interesting that, isn't it? Because I'm a parent, got a 4-year-old, and I remember a change in my thinking when I had that new huge responsibility. Michaela, you're a mother too, aren't you? Did you find the same thing?
Well, mine's 3.5, so a similar age, and definitely, I mean, like the sort of programmes I do, I'm often asked to do really crazy things. I mean, including swimming with sharks and doing things that, you know, your life could be in danger. And I remember I was doing Michaela's Wild Challenge for Channel 5 when I got pregnant, and they said to me after I gave birth, they said, look, we're presuming you're not going to want to do the dangerous stuff anymore. And I said, well, funny you should say that. And this was a bloke that said it to me, so I was really impressed. I said, no, I just don't feel quite so gung-ho right now. And I think because I've got a little one that totally depends on me, I mean, maybe by the time he's 15, I might sort of want to be jumping off cliffs again and doing crazy things. But right now, you know, I know how precious I am to that little boy and how he would be absolutely, well, I mean, what would he do if his mum wasn't there?
Yeah.
So, yeah, I've definitely started thinking about my own security, as in not doing crazy things anymore, and also thinking about his security for the future.
That's the key to it, isn't it? It's all very well looking after their well-being, but we are also such a precious component of their lives. And you know, Roger, we insure our phones and our pets and of course our houses and our precious vase, but not ourselves.
It's amazing how people tend not to value themselves and their worth. I mean, yes, it's great to buy a car and you can drive around in it and you can put it on your driveway and you can polish it and therefore you're proud of it and you want to insure it. But if you actually think about how much you are worth, even in terms of the salary that you'll earn over the course of your lifetime and what that can mean to your family, that salary buys your house, it buys the food, it buys the clothes and all of that sort of thing. And why wouldn't you insure something so valuable, your own ability to provide for your children?
It never ceases to amaze me with a car. You know, you have to MOT your car by law every year. You have to insure your car. And yet people don't look after themselves, they don't have a checkup, and they don't insure themselves. And you think, what's more important, your car or you?
Yes,
well, I think most of us would say we're more important than our car.
Yes,
and people will insure a mobile phone and then they'll replace it in 6 months' time.
Yeah.
You can't replace yourself every 6 months.
Yeah, and of course these sorts of issues will come up, by their very nature, at a time when the family is under a great deal of emotional trauma and stress, if it's the death of a parent, say. So the last thing you want then are financial worries.
Absolutely.
Isn't it? You've got personal experience of this,
yes, because
you?
my partner, before I met him, his wife very sadly died of cancer, leaving 3 children behind, twins of 11 and a daughter of 13. And fortunate, she was a money earner, she had a salary, and she did have a little bit of life insurance, which then sort of got the family through that first year. It wasn't a huge amount of money, but that first year when one parent dies is everyone falls apart. I mean, obviously, emotionally, it's hectic. And it means that those children didn't have to be taken out of the school they were in. They didn't have to sell the house. They could just continue on a bit, and everyone could just sort of grieve but get on with their lives that they'd had before their mother had died.
Yeah, it's that
terrible time. Continuity, you're right, absolutely right.
Yeah, because it also, you know, if you put it in financial terms, it costs a huge amount of money to bring up a child, doesn't it? What's the figure these days?
Well, it depends which article you read, but about £250,000 to raise each child that you have. So £250,000, and that's for one.
That's if you feed them.
Imagine if you're having, like yourself, you know, a family of 3 or 4. That money mounts up over time, and again, you've got to think about it's my salary and my partner's salary that's funding all of that, in addition to paying for the house and the mortgage and our own needs and entertainments and lifestyle. We've got a huge financial commitment when we have children, and it's really quite irresponsible not to plan for the future, to make sure that if something happens to us, there is that financial safety net in place to ensure that they can carry on if we're not here, or if we are here but less able to look after them, we can all carry on and live our lives to our best abilities.
Okay, so we're all terrified now, and I'm going to run home. I'm going to run home and check my policy. I know I've got one, but I don't know how much it's for, and my husband's.
I'm still terrified by £500,000. That's £1 million for 4 children.
You should have thought of that before.
No, only one of them's mine.
And no more. Where can people who know that they're not covered go today to get some advice?
The first thing is obviously the internet. I would always recommend that somebody spoke to a financial advisor, and you can go on the internet these days and find the address of a financial advisor near to you. There are other sorts of people though who would maybe like to do a bit of research first. They'll go onto the internet, they maybe type in life assurance, they maybe type in income protection, and they can read about what's available, they can learn about the policies that they can take out, and then they may go and find an advisor who can take them through some of the detail and find something that's absolutely tailor-made to their own circumstances. But the key thing is, do it. Let's not think about, oh, I've got to get my son off to his swimming lesson. There's a karate lesson for my eldest daughter. I'll do the life assurance thing tomorrow, and then tomorrow it's something else, and you're always putting it off. Sit down, take stock. Get on the internet, get on the phone, and start to think about these important things.
And as well, let's not forget, it's a pretty gloomy thing to be thinking about, isn't it? You don't really want to talk about it.
It's not top of the sort of cheerful comedy list, is it?
It's not, is it? No.
But it's a reality, and I mean, I've been saying, just sit down, do your will, do your policy with a glass of wine, and you know, some little nibbles, and do it together with your partner, and you know, just make it one of those things. Right, we've got to do it tonight. Let's make it as pleasant as possible, and it's a bit of a grim subject, but let's get on with it and tick it off.
Almost make it like a family annual general meeting or something like that.
Well, I can see my 3-year-old sitting through
Absolutely.
that.
Oh yeah.
He could be the chairman. He could be the chairman. He could
and those nibbles, well, you'll never get any of those. Let's have a look at a question. Thomas from Bentley has contacted us. He says, what are the different types of illness? He's talking about illness cover out there. For example, if I fall ill and I'm unable to work, does it depend what's wrong with me as to what covers me?
Right. I think what Thomas is alluding to here are actually 2 types of insurance. The first one that he alluded to is what's known as income protection. That pays out if you can't work for whatever reason. So that could be a bad back, it could be a broken leg, or it could be something serious like a heart attack or cancer. But the actual thing that you have to pass in the definition of the policy is you're unable to work for whatever reason. So that's income protection. There's another sort of policy you can buy which is called critical illness cover, which pays out for specific illnesses. So if you were diagnosed with cancer, even if you could still work actually, if you were diagnosed with cancer, you would get the money. So there is a specific difference. Now if you think about it, if your ability to work is the most important thing and to bring your salary in, then perhaps you should be thinking about something that will pay you an income, whatever it is, that keeps you off work. If you maybe think about, well, if I got cancer or had a heart attack, then I would definitely take a year off work, and in order to do that I would have to specifically clear my mortgage and everything. Then you could think about that as an alternative. Probably ideally you could probably do with somewhere a little bit of both, to be honest.
Okay, great. Hope that answers Thomas's question. Trevor from Lincoln has raised another important issue, I think. I'm in my late 30s and lead an extremely healthy lifestyle. When should I start thinking about life cover? When's the best time to start?
That's an interesting question, because obviously the healthier you are and the younger you are, the cheaper life assurance is going to be. But if you're young and healthy and you've got no family or dependents, you don't actually need it. It's only once you've got a financial relationship, so if you've got a partner and you buy a house together, and then of course, as we've already said, when children come along, that's when you need to start thinking about buying it. And of course, if you're into your late 30s and early 40s, when you get into that position where you need to buy life assurance and you're leading a healthy lifestyle, you're down the gym every day, you're running, whatever it is, then maybe you'll get a better deal because you're healthy at the same time.
And there are certain triggers, aren't there? Life triggers. I mean, Michaela, when did you think about taking out the policy?
I think definitely when you have a child, because you think when you're on your own. Even when I was with a partner before, I thought, well, if something happens to me, he can earn a living. You know, he'll have to change his lifestyle a little bit, but he'll probably meet somebody else. But I think when you have children, and then you're expecting someone to take those children on, I mean, just say, God forbid, that you were both killed in a car crash or something. Someone has got to take those children on, which is an enormous undertaking. Imagine if they then have to undertake all the financial burden of it as well, not only the emotional burden. So I often think about that, and I just think, oh no, that's just too awful to bear. So, you know, at least get the finances in place, and then, you know, assign somebody to take care of your children. I mean, it is an awful thing to talk about. We all hate talking about it.
We should really have the glass of wine and the nibbles. I'm sorry that I didn't provide those. Another trigger is when you get a mortgage or buy a house with somebody, and that often is when you're quite young.
I think for most people, the commitment to a mortgage is the biggest financial commitment they're likely to make in their entire life. I mean, you know, £50,000, 100,000, 200, whatever the figure is, it's quite a lot of money compared to the salary that you on. And what you really need to think about is, again, what happens if I can't work? Because it's my salary that's paying the repayments. If I died and I've got a family, the last thing that they should be saddled with is having to pay off that debt if I'm not there. So put provision in place. So again, going back to maybe what Thomas said before, your income protection could pay your interest payments if you can't work for whatever reason, and a critical illness policy could pay off the whole mortgage if you had a serious heart attack. And it's things like that, the subtle differences between the cover, which again I would recommend people speaking to a financial advisor, or at least having a look on the internet and finding out what the different options are.
You used to get life insurance with a mortgage, didn't you, in the old days? If you had an endowment, life insurance would come with that.
That's correct. Actually, it's a very good point, because yes, 10 or 15 years ago, every mortgage, it was almost compulsory. Just like having car insurance is compulsory if you have a car. It was compulsory to have a life insurance policy, and indeed a lot of banks said you had to have a life insurance policy and you physically had to assign it to them, almost though they were guaranteed to get it if you died. Now, of course, the majority of mortgage lenders don't require life assurance as standard. They recommend. I think they will recommend. It's just a change in buying patterns, a change in the way, and of course endowment mortgages don't exist anymore because some of them weren't very good for customers. But that fact that it was taken away was the fact that you had to have it meant that now a lot of people don't.
Yeah. And
again, you know, if you're taking out a mortgage, sometimes you don't even have the conversation.
Yeah.
And again, it's a conversation you should have, because eventually, you know, who's living in the house? It's not just you who's paying the bills.
Yeah, mortgage is a hot topic at the moment, as of course is redundancy. And we've had a question in from Justin. I'm worried about my job in this climate. Should I get income protection just in case I'm made redundant?
Again, I think that financial advice would be good. Income protection, you need to be slightly careful. If you go onto the internet and type in income protection, it will sometimes come back and tell you about the thing that will pay out if you're sick and can't work. Some of those policies don't cover redundancy. So if you're specifically worried about redundancy, if that's what you're worried about, make sure that the sort of policy you're taking out covers you not only for sickness, but also redundancy as well.
Yeah.
Or you could just get one for redundancy if that was what you were worried about.
Now let's just think about how much all of this costs? Because a lot of people might be put off thinking, oh, you know, 250,000 quid for each child, that's going to be a fortune each month. What sort of, obviously you can't be very specific, what sort of figures might we be talking about?
Well, it does depend upon the age of the person, but life insurance in particular is so cheap these days that even well into your 40s, you could probably get around about 250,000 pounds worth of cover for about a tenner a month. Now, the reality is, a lot of people probably think it would be more like £100 a month. £10 a month for £250,000 isn't too much of an ask. And okay, I know that we're in a recession at the moment and people probably are looking for ways of saving money, but actually a tenner a month, you know, it's
better to give up that cup of coffee on the way to work.
Absolutely. Or maybe we'll do without the wine with our nibbles, whatever.
Misery.
But
don't go that far.
We'll do without the nibbles.
yeah, we'll do without the nibbles and keep the wine. But it's just making, you know, like if you buy a magazine regularly, take a subscription to it, because that usually halves the cost, and that frees you up another tenner, which you can use to buy that. I mean, £10 a month for a couple of £100,000 is great value for money.
I think what you said earlier, Michaela, is quite interesting, this idea of a sort of MOT of your finances. It's sitting down with or without the wine and looking at all the outgoings. And I imagine a lot of families around the country are doing that right now, aren't they? Where can we make savings?
Well, you'd hope so. And
Yeah.
you know, obviously there will be, in this recession, there will be disaster stories. But I think for some people it will make people just tighten their belt in a positive way and look at ways they can save money and think, gosh, you know, we've saved a lot of money by not actually doing that much. So I think it is important to sit down and talk about your finances every so often. And I think even with life insurance, you know, you have to, in another sort of 4 years, think it through again. Because obviously even if you have children, they're reliant on you for, 20-odd years. So you can change it and manipulate it as they get older and maybe, you know, lessen it or something when they're much older.
Is it that flexible? Can you... You know, you're not locked in forever
No,
once
I
you've
mean,
signed up.
you will usually take a policy out for a specific period of time, 20, 25 years, but most policies will include flexibility to allow you to increase cover, decrease cover. You could have it linked to inflation. I know that inflation isn't very high at the moment, but you could have it linked so that it goes up each year in line with inflation. There are certain policies that might go up and down depending upon how much of a mortgage you may have paid back if you have an offset type of mortgage. So policies have flexibility. Again, there are different things out there, so you need to research it, you need to speak to a financial advisor. There are some which have got no flexibility at all and are quite cheap. Some you might pay a little bit more for that extra bit of flexibility. But it's like most things in life. If you take the absolute cheapest option, it tends not to have much in the way of extras. If you want just that little bit of extra flexibility, I suppose it depends upon models of cars. If you want leather seats, you pay a bit more. If you want a bit more flexibility, you pay a bit more.
Yeah, and in fact that feeds nicely into Pete's question. He says, I've already got critical illness cover, but I'm not sure, it's quite expensive. Could I transfer the policy over, or is this problematic? So that gets to the heart of the flexibility question.
It depends what he's wanting to transfer it over to. When you take out a critical illness policy, you are insuring yourself against being diagnosed with a list of illnesses, 20 or 30 different illness conditions. It's like car insurance. At the end of a year with a car insurance policy, if you haven't had an accident, you don't get any money. You might get a no claims discount. But it's the same with a critical illness policy. If you haven't had the illness at the end of your insurance period, then you don't get anything back. That's just the nature of insurance. So sometimes if you take a policy out and you want to stop it and move to something else, it's usually just a question of saying, well, okay, I've decided that's not what I need, and I'll cash it in and take out something else. But you won't actually be saying, well, you haven't claimed, so we'll give you your money back, or we'll give you an investment amount back, because that's not the way that they work.
We've got another question here from Peter. He's got 3 children, all under the age of 10, and was recently diagnosed with terminal cancer. What sort of policy would be available to him?
These sorts of policies are quite difficult for people who have already got an illness to take out, and the circumstances here are obviously quite sad. You might be able to find specialist insurers that might give people a little bit of cover, but the reality is that if you're already ill, it's going to be very difficult, or at least very expensive, to provide cover. I guess sadly what it does highlight the fact is that as going back to the earlier point, to the gentleman who said he was fit and healthy, if you can buy this when you're younger, when you're fit, then you're providing for the future eventualities such as this.
And another question that's come in, so it's slightly off what we were talking about earlier, but from moneyhighstreet.com, you asked earlier that £250,000, was it based on private education? This question is about what is the best way to save for and fund your child's private education. Now, not specifically if one spouse dies, but so it's a bit of a broader question.
Yeah, I mean, it's a very interesting question at the moment with the economy in the way that it is, and interest rates are low. Therefore, people who are saving money in building society accounts and investments are perhaps not getting the return that they would have had a few years ago when interest rates were higher. And obviously, with the stock market in a bit of a downturn as well, you're not seeing the return on savings. I guess looking to the long term, if you can put money into something over a long period of time, then the usual long-term trend is upwards. So if you can save some money each month, either in a safe haven like a bank account or a cash ISA or something like that, or again speak to a financial advisor about the pitfalls or advantages of investing in certain investment vehicles, then you could put together a portfolio which might give you some long-term growth, and ultimately you could then use that growth in the future to pay for the school fees that you've alluded to.
A lot of people who rely on grandparents to contribute to the school fees are really suffering at the moment, because the grandparents' income is based on investments and savings.
Absolutely.
I must tell my mum that then. I'm relying on you for £250,000 for my child's education.
The grandparents wanted to spend that on going on a cruise around the world as well.
Oh, so there are going to be some tricky conversations around the kitchen table.
Absolutely.
Darlings, you know little Tommy's in private school. Well, we're going on that cruise instead. But you're right. It is a horrid subject. We just need to sort of grasp the nettle and speak to the right people. I kept hearing you say you need to speak to an advisor because it's a very personal thing. It's like the solution for you is going to be very individual, isn't it? So it's not something you can just buy off the shelf.
Oh, I think you can buy simple policies off the internet, but it's also important to make sure you get the right combination of what you need for you and your family. So speak to a financial advisor. Go on to brightgrey.com, which is our website where we have generic information. That'll tell you about the sorts of policies that are available. But again, get the advice that can allow you to create a tailor-made solution for yourself.
Yeah. So do you think you've got enough peace of mind with your policy, Michaela?
Look, I'm still reeling about £500,000. No, I do actually. As I say, I've got a lot of financial plans, and I've really thought it through. And instead of putting it at the sort of bottom of the list, because my partner has been through it, he sat me down and he said, right, we're going to write our wills. And I actually live abroad, so mine's very complicated, and I had to see all sorts of financial advisors. And I have a will in the UK, and I have a will in South Africa, and I have all sorts of policies in place. Gosh, it's complicated. It really is. Mine is very complicated, but if you live in one country, it makes it a lot easier.
Of course, for a lot of people, it's not as complicated as that. No. And a bit of advice. Even these days, putting a will together, there are ways that you can do that quite easily. I think a lot of the time, it's just finding the time. Yeah. And again, not putting it off. Yeah. Because yes, you can find a will writing service on the internet, you can find an advisor on the internet, but if you've got somebody screaming at you because they're hungry, they want their tea cooked, or they're screaming at you because they've got to get to football, yeah, exactly. and little Johnny's got his football practice and he has to be there, otherwise he doesn't make the first team. We'll forget the will today, we'll do it tomorrow.
But it doesn't actually take that long.
Not
once I decided, right, we were going to sit down and do it, we got a guy in. It didn't actually take that long.
But a lot of things in life are that, aren't they? They're like that. They're at the bottom of your to-do list, and then they take 10 minutes. So let's all
put it to the top of the to-do list.
Exactly.
That's what we need to do.
Michaela, thank you very much for coming in. Have a good flight home. Have a good train journey home.
Thank you.
And it's been very interesting. If you want to find out a little bit more, go to the website that Roger just mentioned there. It's brightgrey.com. Thank you for watching. See you again soon. Bye-bye.